If you're into stocks, if you buy and sell shares, if you own shares, if you intend to get into this business, I urge you to listen to this. This is the beginning of understanding as far as shares are concerned that we want to bring to you today under the auspices of Investors Education Series, as we have always done on Broad Street. Now, there is a practice, fraudulent if you like, that stocks go up not by their performance, but by manipulation. It's not only in Nigerian Stock Exchange, people try to manipulate prices other places. We try to operate a near perfect market and we can boast of our market anytime. But it's not always true. People have always found one way or the other to manipulate. So there is a practice that is fraudulent. It's called pump and dump. Pump and dump. A form of securities fraud that involves artificially inflating the price of stocks through false and misleading positive statements. Through false and misleading statements. Now, that is the pump. In order to sell cheaply, the cheaply purchased stock at a higher price. That is the dump. From where you got the name pump and dump. Now, let me take it very easy and light. The market thrives on hearsay to a large extent. Performance is another thing that pushes stocks up or down. But market hearsay is so strong. Now, somebody begins to tell a story that is unfounded, how maybe major core investors are getting into a stock which is not true. And he says it in today's soft media. And people begin to patronize this stock, believing that he said the truth. And he himself had intention. He had bought it at a lower price and hype it up by saying things that are not true. Market here say that are positive. That has become price sensitive. And people begin to buy the stock with him. He had bought, he is buying at a lower price. And that hype continues and the price goes up. When it gets to the point where he wants to exit, he dumps it on the people that are coming in at that time. This is why I told you that this topic is of interest to you if you are an investor, so that they don't dump on you stocks that have no reason to appreciate. We take one or two of such examples and we will look at it together. So, pump and dump is an illegal practice. It is not proper. But it is very difficult to pin down somebody on it. Very, very difficult. It's not like market hearsay in the sense of pure market hearsay. It's not also like insider dealing. In insider dealing, for you to be charged for insider dealing, you must be an insider. But anybody can fly a kite and people begin to buy the stock, believing that is true, while he had his ulterior motive to pump the price by false information. And then people will buy. As people buy, it gets to the point he wants to sell, he dumps it on them. By the time they knew or know what is going on, he has already smiled to the bank, so to say. So that practice is there and it's called pump and dump. And that's what we are getting interested in today. That's what I want you to understand. Now, what stocks are easily amenable to such a practice? What kind of stock do people use to do pump and dump? We look at number one, stocks that have high concentration of holding in a few hands. Any stock that the holding structure is not spread out, high percentage of it are in few hands, are amenable to pump and dump. And it is those people that will most likely do it. There are certain stocks which we will look at. that over 60% of it is in the hands of 5-6 people. Such stocks are amenable to pump and dump. Stocks that have low liquidity are amenable to pump and dump. Now, we are interested in the liquidity or the liquid nature of the stock. There is no need for stocks that you buy and you want to sell and there is no buyer. Or you want to buy and you hardly can get it to buy. It is illiquid. Such stocks are amenable to pump and dump. Stocks that do not meet the threshold of the free float. Nigerian Stock Exchange says you should have a float of about 20% of your paid up capital or shares on issue, whichever one you call it, for it to have a proper float. That's to say, if you have 100,000 shares paid up in a company, you should have at least 20% of it available for trading on daily basis. That is about float. Now, if you see any stock that the float did not meet the threshold, it is hardly available. You surely look up and be sure whether you are not getting into a pump and dump because it's amenable to pump and dump. Now, another characteristics of stock you must look out to be sure that you don't get into pump and dump is stocks that have abnormal spike in trading volume. It wasn't traded heavily. All of a sudden, a big volume is traded. I'm not talking about when volume change hands. It is possible that there are new investors coming into the market and they have given an order. I won't forget many years ago, Heineken, Germany, wanted to buy into Nigerian Stock Exchange, Nigerian breweries. And we know the stockbrokers that they used then, and they bought it for a period and crossed it over. That one is understandable. We're talking about a spike in the volume that is not necessitated by anything we know. And then that's why the stock exchange have rules. One of such rules is that there's a certain volume of shares that you want to cross. You must notify the stock exchange because it constitutes a good volume. So spikes in volume are things to watch, abnormal spike. Now, let's look at a few cases that you can follow. There's a stock called Julie PLC. Julie PLC in 2004 had the highest year-to-end appreciation. It appreciated by 1646% in the year. The turnover was barely 349 million naira. 67% of this stock, or 200 million, is a paid up capital. 67% of it is in the hand of 3 shareholders. 3 shareholders hold 67% of this stock. And you can see the appreciation that happened in a short while. Over 1,000%, 1,600 and something percent appreciation in a year. Beware of stocks that have concentration, high concentration in the hand of a few. 3 people holding 67% of that share. Of course, we know the origin. We know it's a pharmaceutical retail outlet. I don't know how many shops they have. So when you see such things happening, be warned. Another stock of interest is SCOA. SCOA has a market capitalization of 4.61 billion. And in the year 2025 up to now, this from January till now, it has appreciated by 246%. Look at the capitalization of the market, 4.61 billion, and has appreciated. You should watch also. Another stock which may even gain this day is NCR. The full name of NCR used to be called National Cash Register. And that stock had been around for a while. As I speak to you, they have been gaining every day for some time now. It has gained 519% from January till now. That's to say, if you have put 100,000 in it, you'll be smiling home with more than 500,000 naira in this part of the year where we are. That's a good appreciation in quote. Last year, it gained only 26%. This year, it has gained 519%. Now, the issue of NCR, we know that it's concentrated also in a few hands. One man holds a very big, that I'm not sure the man is still alive, but the family still holds it. And a few other hands. So they qualify for such. Another stock of interest is Chilaram. Chilaram has a very low liquidity. It's a trading concern. Even though they have made some appreciable profit in the course of the year, judging from the results we have seen, the stock has appreciated by 339% year to end to date. Now, we also know the concentration. So be on the lookout. What I would advise if you are a new entrant into the business, even if you are not new, but you have not taken time to understudy the business, leave your faith in the hand of your stockbroker. Give him the money. Tell him what to buy. Leave him because he has time to analyze the movement of stocks and all these things we are saying. If you are not an analyst, if you are not a practicing stockbroker, if you are not in the business of investment banking, you may not understand all these things we are saying, and it could be risky for you to choose. People have walked up to me even a few days ago, and one of them said to me, I want to buy ASO 7s. Is it a good stock? I told him ASO 7 had been jumping up for some time now. Reason was that they were suspended for a while for not meeting up post-listing requirements of the stock exchange. And as soon as it is lifted, it began to jump up. It is not the reason to jump up. How I wish that the reason is that they posted out, their result was not bad, I must give them to that. But it had jumped and jumped and jumped to the where it is now. So if you must get into stock, do not burn your finger unnecessarily. Leave that choice of which one to buy. Discuss with your stockbroker. Leave him to buy and tell you how he arrived at it. If he's creating a portfolio for you, he tells you, I want to get into banking and finance. I want to get into building materials. I want to get into consumable goods. I want to get into real estate investment trust. And in these different sectors I have named, this is where I want to put your money. Agree with him. He will help you to do it. Do not take over the management except if you are knowledgeable. Of course, there are some clients who are very knowledgeable. I have some of them. Some of them tell me what to do, and I don't query it because I know they were sound in their decision of where to go. So, our privilege today to help you understand that there is a practice. This practice, though illegal, but it goes on. If the stock exchange catches you, you pay for it. But it's a little difficult to be caught doing it. The practice of pump and dump. I think the name came from the practice itself. You pump it up, pump it up, pump it up, pump it up, and dump it on the people that are still following you, not knowing your purpose. Every day, we'll be able to bring you more and more of this. Thank you. God bless you.